SoFi stock has just had one of the strangest weeks in its history. The stock is down 48% from its 52-week high, but has it gone too far? This week, Muddy Waters published a short report. But is there actually any truth to this? Anthony Noto certainly doesn't think so. In this video, we will explore if SoFi stock can reach $30 again in 2026. If you're a SoFi investor, then you will want to watch this, and later in the video, we'll look at how to make the most of the current dip. As always, I'm not a financial advisor, this is not financial advice, so always do your own due diligence. In the hours after the Muddy Waters short report, two things happened. One, Anthony Noto doubled down and bought more stock. He bought 28,900 shares at $17. And secondly, SoFi responded by calling this an inaccurate short seller's report, stating that we intend to explore potential legal action against Muddy Waters for the factually inaccurate and misleading report they shared about our business today. Now here is the short seller report. And seeing that this was released like 3 days ago, I'm going to guess that everyone watching this video has already taken a look at this report. But I just want to point out something that's very important here. The very first page of this, the disclaimer. Muddy Waters have stated that upon publication, we intend to begin covering a substantial majority or possibly all of our short position. Now, although they do say here that this is not a reflection of a lack of conviction in their opinions, surely as a short seller, if this is their opinion, then they would not be looking to close the short position immediately after publishing this report. Like, if they genuinely believe this, if they believe all the things that they've said in this report, then why would they be looking to cover the short position ASAP? I'd love to hear your thoughts on this, so please drop a comment below and let me know what you think of this. I've been covering SoFi all the way since it was only $6. I've looked at the financials quarter after quarter for about 3 years now. And I'm sure a lot of you watching this video have too. So let me know your thoughts. Can SoFi stock reach $30 by the end of 2026? Although this might seem like a strange question, considering that the stock was $32 just 4 months ago, this is the reality that we are in right now. The markets are beginning to crumble and it's affecting almost every stock, which I'll talk about later in the video. But right now, SoFi trades around $17 per share. But can SoFi get back to $30 by the end of this year? SoFi wants to be the future of banking, and let's not forget that this is a company that dazzled the market with its high growth and innovation over the past few years. The stock ended 2025 with a 70% gain, on top of a 55% gain the year before. Lending is its core segment, typically accounting for about half of total revenue, but it's its financial services segment that's growing much faster. This segment includes all of the non-lending services like investing and cryptocurrency trading. But SoFi has a business-to-business segment that it calls the tech platform. Management has likened this to the Amazon Web Services of financial services, and while it has been growing more slowly than other segments, it has been adding value to the company recently by providing the infrastructure capabilities to launch new products quickly. The concept is working. It continues to report record new additions each quarter, reaching 1 million new customers in 2025's fourth quarter. New products are outpacing new customers, with 1.6 million new ones in the fourth quarter, indicating that the company's cross-selling strategy is working. Now, this is something that I've talked about many times. SoFi isn't just adding new members that don't bring much value. It's the cross-selling strategy of products that is driving huge growth. But for SoFi stock to get back to $30 by the end of the year, now that it has dropped down to just $17, it would need to gain approximately 72%. Adjusted net revenue increased 37% year over year in 2025 Q4, and earnings per share were up 160%. If the company continues to report this kind of growth, it could certainly gain 72% by the end of 2026. SoFi is one of the stocks that is going in a strange direction. The stock price is falling as earnings are rising. At the current price, SoFi stock trades at 47 times trailing 12-month earnings, a discount to its 3-year average, and only 2.1 times book value. But there is so much economic tension right now. There are several other pieces that have to fall into place for SoFi stock to reach $30, which I will talk about in just a moment. 1 million reasons to buy SoFi stock. SoFi reported a blockbuster quarter to end 2025, and the stock has just continued slumping into 2026. After hitting a high of $32 in November, SoFi stock is down almost 50% in the past 4 months. Now, fintech is reshaping the future of finance, and this fintech company has major catalysts for this year to drive strong growth for the years ahead. My investment thesis remains bullish on SoFi, a stock that has fast become one of the cheap fintech stocks. Couple this with a major insider purchase, and this is signaling a potential bottom. SoFi CEO Anthony Noto bought $1 million worth of shares back on March 2nd. The CEO bought 56,000 shares at an average price of $17.88 after not buying shares for some time. But Anthony Noto has a history of timing his purchases perfectly. He famously bought a substantial amount of shares back when SoFi traded around $5, including $5 million worth of shares back in early December 2022. And the CEO last bought shares on June 14, 2024 at $6.48. The stock shot up to a high of nearly $33 at the end of 2025. And this new purchase is notable in that Anthony Noto tends to buy the stock when it's extremely cheap, especially considering he already owns 11 million shares. SoFi forecasts a big 2026 following the outstanding results in 2025. The company just entered crypto trading and stablecoin payments to drive the business this year on top of a business with already healthy growth. The crypto product added 63,000 accounts in Q4 with a launch not until December 22nd. As an example, money and invest portfolios have 3 to 6 million accounts, a sign of the potential scale SoFi could reach in crypto over time, while their guidance suggests a very impressive 30% growth for the year, with revenues reaching $4.7 billion. More importantly, SoFi guided to adjusted EBITDA reaching $1.6 billion for 52% growth, with margins reaching 34%. On the Q4 2025 earnings call, the CFO reinforced the strong growth trajectory for the next 3 years, saying that looking beyond 2026, given our differentiated model, the strength of our balance sheet, and the tremendous opportunities that exist across our business and in newer areas, we expect to deliver compounded annual adjusted net revenue growth of at least 30% from 2025 to 2028. Additionally, we expect to deliver compounded annual adjusted earnings per share growth of 38% to 42%. The stock currently has a market cap of only $22 billion on this dip below $17. SoFi only trades at 14 times the adjusted EBITDA target for this year. Not to mention, the goal is for upwards of 40% earnings growth, substantially above the valuation paid for the stock. The biggest risks here are simple. They're the same risks that we've seen for many years, but they are in focus now more than ever. If SoFi's growth fails to meet aggressive targets due to competitive crypto and stablecoin markets, and SoFi could face some risk of the loan portfolio underperforming if the US falls into a recession or general economic weakness. And with rising energy and fuel costs that have come from the conflict in Iran, this is really pushing the narrative that a recession could be on the way, especially as reported today that one-year inflation bets have surged past 5% in wake of the oil shock. The US Consumer Price Index was 2.4% year over year in February. However, since February 28th, March CPI odds have climbed nearly a full percentage point to 3.3%. Overall, the longer this conflict goes on, the longer we have fuel prices skyrocketing, the more chance we have of a recession and stocks dropping. But the moment it's resolved, we should see stocks that have been heavily beat down, such as SoFi, rally back hard. The key investor takeaway on this SoFi analysis is that SoFi is crazy cheap on the dip to $17. Hence, CEO Anthony Noto loaded up on shares again. The CEO is likely to continue buying shares in the future based on his actions a few years ago. Investors should use the stock weakness to load up on SoFi at prices similar to the CEO. The market hasn't clearly hit a bottom yet, so investors need to reserve some capital to buy into further weakness if you believe in the stock long term. Looking at the charts, we can see that we are trading right around this key level, a level that we've not seen in nearly a year but has proven historic support. There is not a single 2026 analyst price target that is below today's price. And overall, if this price is good enough for Anthony Noto to make his first purchase since 2024 and then make a second purchase only weeks later, then I think that says a lot. But what do you think? Drop a comment and let me know. If you enjoyed this video, then remember to like and subscribe, and I'll catch you in the next one.